What is up guys, Taiki here, and in this video I'll be going over my bullish case for Sudoswap. So if you like the content, please like and subscribe and leave a comment in the comment section below. So this video will be very long. This slide deck is 140 slides long, so I'm gonna add timestamps in the description below so you can navigate, some sections that you don't care to hear about. But the goal of this video is to give a holistic explanation of what Sudoswap is and how they differentiate themselves away from OpenSea and its various forks, and why I believe that Sudoswap has a reasonable chance of taking a significant market share of the total NFT trading volume in the coming months and years. So that being said, this is going to be the agenda of the video, so let's get right into it. Full disclosure, none of this is financial advice. I'm just some random guy on the internet that specializes in DeFi, right? I'm an NFT pleb. However, XMON is my largest altcoin holding right now, so I'm definitely biased, right? I definitely have that bag holder mentality, but I think I have this much conviction for good reason. So let's go over why it is. So Sudoswap, as a briefer, right, is a fully on-chain AMM for NFTs that allow for customizable curves by LPs. Think Uniswap v3 for NFT trading. It allows for instant liquidity and allows for royalty-free trading. So that's a lot to take in. So let's kind of break it down. Okay, so I first want to explain how OpenSea and LooksRare works, compare that model to Sudoswap, and I guess the pros and cons of each model. And some of these points will be based off of this article, right, from Medium, so I'll link this in the description below. I don't really know who this guy is, but he wrote a really good article. So I guess the benefit of OpenSea is that it's easy to really understand the UI and the UX, right? OpenSea obviously is a centralized company. Everyone's familiar with how OpenSea works. They do charge a 2.5% fee, but their moat is that, if people are familiar with it, artists list their NFTs on it. Just because OpenSea honors royalties, royalties aren't enforceable on the contract level. So if OpenSea one day suddenly said that, no more creator royalties, artists won't, be able to charge royalties. So that's one thing that's important to keep in mind. And later in the video, I'll discuss, I guess, the pushback and the arguments behind, royalty-free trading and the ability for creators to charge royalties. I think there's good arguments to be made on both sides, but I'll save that section for later. So OpenSea operates on this Orderbook model for NFTs. So I'm not gonna, I guess I'll kind of briefly touch on this, but whenever you want to sell an NFT on OpenSea, you list your NFT on OpenSea, right? And you essentially list the price for it. So if you have a Bored Ape Yacht Club, you might list it to 100. You might list it on OpenSea for 100 ETH, and you go to OpenSea and you essentially tell OpenSea that, hey, I have this NFT. I give you permission to I guess transfer it to another owner if they agree to pay up whatever I want to sell my NFT for. And when you do this, your signed order is stored in an off-chain order book hosted in a database by the exchange, and it's displayed on the interface for the potential buyer to browse. And of course, it sits there in the order book until someone decides to until someone takes a liking to your particular JPEG. And if they do agree to pay 100 ETH for your Bored Ape, then there will be a transfer of the 100 ETH from their wallet to your wallet. OpenSea will charge 2.5%, right, for fees, and then whatever royalties that the Bored Ape Yacht Club charges, it goes to the creators, right? That's kind of how it works. But obviously, OpenSea, them charging 2.5% like in trading fees, like, is that reasonable? Like, is it reasonable to expect that that's going to be the norm for the next, I guess, 10 years of NFT trading? Probably not, right? I think it's reasonable to expect that trading volume for NFTs will also go down. I think the same can be said for creator royalties too. Of course, I mean, I totally vibe with the idea that, creators to be able to monetize whenever an NFT moves around in OpenSea, but 5%, 10% royalties, that's pretty high, right? Like, I think the average royalty is like roughly 7%. So if you're paying 7% to the creator and 2.5% to OpenSea, then you're essentially taking a 10% tax on every NFT transaction. And, I mean, I guess for OpenSea, that's great, right? And I guess for the creator too, that's great. If there's a lot of volatility in the NFT markets, then the creator is like making a killing. But from a user experience perspective, I think over time, if you study how, I guess, capitalism works, products just evolve over time. As there's more competition, fees tend to converge to zero, right? That's kind of what you see with like stock trading, right? People like in stocks, or I guess companies used to charge you for trading stocks, but now with dark pools and order flow, right? Payment for order flow, you know, if you're trading on Robinhood Fidelity, you get to pay 0% fees technically, right? Even though you're technically paying a fee to these market makers. So, you know, Bored Ape Yacht Club, if you want to sell your NFT, you either, I guess for a particular NFT, if there's like no one bidding for your NFT, you can't really get instant liquidity for your NFT, right? The best thing you can do is to check the floor, right? The very floor of the NFT, which I guess when I took the screenshot was 84 ETH. And if you really want to sell your Bored Ape right away, you kind of have to undercut the floor, right? Maybe list it for like 80 ETH and hope that someone, you know, ends up buying your NFT. There's no instant liquidity, right? This is like kind of the meme of illiquid JPEGs, because in order for you to offload your NFT, you have to find someone else in the world to, you know, take it off your hands and pay you the money. And, you know, yeah, so this is kind of like the whole, you know, illiquid JPEGs meme, right? I mean, it's kind of funny, it's kind of true, but I don't necessarily think that the future of NFT trading is going to continue to be like this illiquid model. I guess you can argue that this is a feature, not a bug, right? If it's harder to sell an NFT, maybe it has more value. I mean, you know, NFT people will like create like these various narratives, you know, to make their non-fungible tokens, you know, sound more valuable. But this is kind of how it works right now. But obviously the lack of liquidity is obviously an issue, and that's what that's what Sudoswap aims to solve, right? It's an on-chain AMM for NFTs. Just imagine what Uniswap V2 did for token trading, right? The ability for anyone to be an LP for for 2 ERC20 tokens. But you know, Sudoswap is doing the same for NFTs. But before I touch on Sudoswap, let's first understand the evolution of DeFi, right? And decentralized exchanges, and the innovation of Uniswap V2, and then the subsequent evolution and the innovation of Uniswap V3. So if you understand Uni V3, I think you'll really understand the value of Sudoswap. If you don't understand Uniswap V3, then, you know, this is a section for you. So, you know, Uni V2 really innovated on this front, right? And it essentially created this X times Y equals K model, where, you know, when you're being a liquidity provider for a token, you provide 2 tokens, right, on this curve, and you're essentially providing liquidity for all price points within this curve. And XY equals K, I mean, that's a really simple model, but it really revolutionized like token trading, right, ERC20 trading. And, you know, without Uniswap, DeFi wouldn't be here, right? Without Uniswap, money markets wouldn't exist, because you need a liquid market for tokens to enable on-chain liquidations, essentially. And I guess that disadvantages of Uni V2, and the team noticed this. This is, I mean, the reason they made Uni V3. But, you know, like I mentioned earlier, XY equals K curve, right? When you're being a liquidity provider, you're essentially providing liquidity for all price points within the curve from 1 to a million, right? Or, I mean, technically from 0 to infinity, technically. So it's not really capital efficient. And if you ever use Uni V2 versus Uni V3 on chain, a Uni V2 pool of like 20 million is going to offer you more slippage, right? Which is worse, right? More slippage than potentially a Uni V3 LP, Uni V3 pool with potentially like $7 million in liquidity. You know, Uni V2 is extremely capital inefficient. I mean, it's still amazing, right? Like innovation wise, it's amazing. But it is capital inefficient, and it doesn't give LPs flexibility. And this is where Uniswap V3 comes in. So Uniswap V3 says, you know what, why not try to create a central limit order book on chain? And so Uni V3 introduced this concept of concentrated liquidity, where instead of providing, you know, I guess being an LP for a token from, let's say, 0 to infinity, right? Price point 0 to infinity. Why can't we specify what price range to provide liquidity at? So for example, let's say Alice, you know, provided $1 million in liquidity, 500,000 in DAI, and 333 ETH, and liquidity is spread across the full price curve. But Bob decides to say, you know what, I'm only going to provide liquidity between $1,000 and $2,500. But in this way, it's still offering better capital efficiency, right? Traders get to swap these tokens at a lower, with lower slippage, and also just because Bob is able to, Bob is using less capital while also facilitating more swaps, they're able to receive more in fees. And you can kind of study Uni V3 strategies. It actually like makes a lot of money. And I think Uniswap V3 is like the future of, I guess, AMM designs and decentralized exchanges. And, you know, it's kind of interesting, right? Because you're kind of concentrating liquidity across the current price, and I guess liquidity tapers off but by their like both left and right tail. So it's technically trying to create this central limit order book where price, I guess there's more liquidity around the current price and less liquidity around, I guess, price is much higher and price is much lower. And this is like definitely where AMM trends and designs are definitely trending, right? And you can kind of observe this in other protocols. So for example, Orca is a decentralized exchange on Solana. They used to just fork UniV2, using Rust, but now they're creating this thing called whirlpools, which is essentially concentrated liquidity on Solana, right? And they are one of the most liquid exchanges on Solana. Similarly, Trader Joe, right? Trader Joe was a UniV2 fork that really captured a lot of market share during the Avalanche Rush days, but they realized that just having UniV2, like their token is going to go to zero. If they want to create value for the token holders and to make Avalanche a more thriving ecosystem, they have to create a concentrated liquidity product. And this is what they've been doing. They've been teasing that it's going to come out soon, but who knows, right? It's going to come soon, essentially. So I think the trend right now is that UniV2 forks, sure, they'll exist on every single chain, right? As a basic necessity, right? Anyone can fork it and just like deploy, but the token holder, the value of the token is going to trend to zero. Of course, it's going to go up a lot and whatnot, but the overall trend for UniV2 tokens is a zero, in my opinion. Decentralized exchange projects are being forced to innovate on this front, and the trend is Uniswap Labs innovate and then forks follow. And before, I know I keep talking about Uniswap, but I do think it's important as a general background. And the other benefit that Uniswap V3 provides is the ability to create on-chain limit orders. Okay, so when we think about providing liquidity, we often think about providing two tokens in a 50-50 ratio, and then just depositing it and like just setting it and forget it, and then earning fees, earning farming tokens, like whatever. But with Uniswap V3, because you can specify which ranges to provide liquidity for, you have the ability to create single-sided deposits. So let's say the price of Ether right now is $2,000. You have the ability to provide liquidity for Ether at the price of $1,500 or $3,000. And this offers some other use cases that people don't really know about. And this basically use case is on-chain limit orders. And if we think about impermanent loss might sound like a scary term, but the idea is that when you provide liquidity, chances are those two tokens that you provide liquidity for, it doesn't move equally, right? So let's say you provide liquidity for Ether USDC, and if Ether moves a lot, right, to the upside, then the pool will technically sell some Ether and to buy more USDC. So a simpler way of understanding impermanent loss is that the pool will essentially, through impermanent loss, accumulate more of the underperforming token. So this is like why when you provide liquidity for, I guess, Ether and some altcoin, and if the altcoin goes to zero, then you lose all your money because the pool will sell all your Ether to buy this altcoin that's already going to zero. But if you think about it, this also creates some use cases. So obviously, let's say the price of Ether is 1,800. You can provide liquidity, Ether USDC, around the current price, let's say 1670 to 2040. And if you do that, you deposit two assets, USDC and Ether, for this range at this current price. And if Ether trades within that range, you earn fees, right? You earn whatever fees that you choose to charge. If the price of Ether goes below this range, so let's say it goes to 1600, then the pool will sell all your USDC and it'll convert all your USDC into ETH. If it goes above the range, of course, Ether is outperforming, USDC is underperforming, so the pool will sell all your Ether and buys USDC with it, right? And it'll finish selling your Ether at 2040. That's kind of how it works. But what about single-sided deposits? Like I said, you can provide liquidity for, you can do single-sided deposits for pools below the current price range. So if the current price of Ether is 1,800, and let's say you want to buy Ether at 1,700, right? But you don't want to worry about it. You just want to set an on-chain limit order to buy Ether at 1,700. What you can do is you can deposit USDC at this price range, so that if the price of Ether nukes below that price, it'll convert all your USDC into ETH at the average price of roughly $1,705. Of course, if the price of Ether somehow remains between the price range between $1,700 and $1,700 over like a 3-week period, then you're going to earn a lot of fees, and you're going to be a very happy man. Of course, if you provide liquidity for this range, right below the current price, and Ether never goes down there, then nothing happens. There is this anomaly, I guess, not really an anomaly, but if, let's say, Ether goes from 1800 to 1600, then yeah, like you earn some fees and the USDC gets converted into ETH. But if Ether just bounces from 1600 to 1800 again, then the pool will sell your sell your Ether and then convert it back to USDC, if that makes sense. This is kind of how impermanent loss works. It's not a perfect on-chain limit order, but it kind of does the same thing, as long as the price of Ether doesn't bounce back. So similarly, you can do on-chain limit sell orders, right, where you can deposit Ether for a price range above the current price. So in this case, if you provide Ether between $1,900 to $1,910, if it stays within the range, you earn fees. If it stays below the range, nothing happens. And if it goes above the range, right, $2,000 or something, it'll sell all your Ether into USDC at the average price of roughly $1,905. So that's kind of how it works. And this is important because with Sudoswap, it also enables this type of action, right? Because with UniV3, if you own an altcoin, it can be a good way to set on-chain limit orders to DC out, right? If you hold a bunch of altcoins and you're happy taking profits at $100, right? You just set liquidity, right? For $100 to $101. And if just price keeps jumping, then, you take profits to Ether or USDC, like whatever you want. Also, if you do want to DCA into a coin, you can deposit USDC or Ether below the current price and buy the token at the price if the price nukes below that price, okay? And you can kind of replace the altcoin or the coin that I specify with NFTs. Because with Sudoswap, with Uniswap v3, like concentrated liquidity, you can set bids for a particular NFT set below the current floor price. So where if the floor price nukes below the price, it'll automatically convert your Ether into an NFT. And similarly, if you have like 10 NFTs that you just like want to DC over time, you can say, I want to sell. Let's say the current floor is 10 ETH, right? But you tell Sudoswap that I want to sell Ether. I want to sell my NFT, right? At 11 ETH, 12 ETH, 13 ETH, 14 ETH, and you kind of set these on-chain limit orders. So that's kind of how concentrated liquidity, how Uniswap v3 works, and I guess the benefit that it provides via on-chain limit orders. So now that you have a basic fundamental understanding of UniV3, right? Concentrated liquidity, limit orders, etc., capital efficiency. Let's talk about Sudoswap and why I think it has a bright future ahead of them. So Sudoswap Sudoswap was, I guess the idea came out like roughly a year ago with this article called Sudoswap V69. Obviously meme, but when this came out, there was so much hype around the product. I think the price went from like $1,000 to like $90,000, but they never shipped the product. But in the month of July, they actually shipped the product, right? And then there's a bunch of volume flocking into Sudoswap, and it really caught my attention. And I think over time, I've built enough conviction to get it to my largest altcoin bag. Who knows? And the concept is similar, right? Unlike this OpenSea model, right, where data is stored offline, you create this on-chain AMM where any LP can provide liquidity for a particular NFT project by depositing a bunch of NFTs and a bunch of ETH and being a liquidity provider, right, and setting customizable fees. And because with Sudoswap and UniV3, you can actually specify what kind of fees you charge and what kind of curve you get to charge, right? Great. I'll show some examples if this doesn't make any sense. Actually, let's just go over examples because talking about this probably will take too much time. But if you go to Sudoswap and you go on the website and you click create a pool, there are some options, right? So the two options on the left, right? These are on-chain limit orders. So you can either set limit orders to sell your NFT at a particular price or limit orders to buy particular NFTs at a particular price. But let's focus on the LP aspect because this is what is important. And if you understand this, and I think you'll get a general understanding of the value props of Sudoswap. So this is what it looks like. I kind of blacked out some aspects because I don't want people to know what NFTs I own, but let's start on the right side, right? So, essentially what you do is you kind of set these fees for whatever NFTs that you have. So let's say you want to provide liquidity for an NFT project, and you have like 10 NFTs, and when you provide liquidity, it allows anyone to buy NFTs from your pool and also sell their NFTs into your pool, right? So you're also, kind of offering exit liquidity for people while also allowing people to buy NFTs from you. And the beauty of Sudoswap is that anyone can create this, right? Whether you're an individual, a firm, right? A project, and you can say, I want to charge 1% whenever people swap my NFTs on Sudoswap. And generally, I think people will charge below what OpenSea charges, which is 2.5%. What this doesn't show is that Sudoswap will also charge the 0.5% fee, right? So if you do 1% in fees, then the total fee that the user pays is 1.5%, right? 1% to the protocol or the LP, and then 0.5% to Sudoswap, right? The actual protocol. So you set your fees, and you also set your starting price. So you have 10 NFTs, and I want the initial starting price for my NFT to be 1 Ether. And generally, LPs will essentially, set the starting price to whatever the floor price is on OpenSea, right? That's kind of how it works. And then you can kind of set whether it can be a linear curve or an exponential curve. I'll explain this more later. But let's say I set the delta, right, for the linear curve to be 0.1. So every time your pool buys or sells an NFT, your price will adjust down or up by 0.1 ETH. So I deposit NFTs in Ether at a starting price of 1 ETH. And if someone buys an NFT, right, then that reduces the amount of NFTs that I have in the pool, and it'll raise the price of all the other NFTs to 1.1 ETH, right? That's the delta. I mean, it's kind of a similar concept to UniV2, right? Like if you provide liquidity for Ether and USDC, and someone dumps a bunch of USDC to buy Ether, then the price of Ether goes up, right? Similar concept. And at the end of the day, once you set your curves, then the UI will tell you, okay, with this delta, with the starting price, with this fee amount, if you want to deposit 10 NFTs, you have to also pair it with 4.357 Ether. It's pretty simple. Maybe it's not simple if you look at it the first time. It was definitely confusing when I first fiddled around with this. But maybe you can go to the website, you can watch the section again and kind of try it for yourself essentially. Right? I mean, I'm kind of regurgitating what I just said, but let's say you want to be an LP for an Ether, for ETH NFT, right? Whatever the NFT is. If someone buys an NFT from my pool, I collect 1% in fees, which does add up over time. And since my delta is 0.1, after one sale, the rest of my ETH in the pool can be purchased for 1.1 ETH. Of course, if someone sells NFTs into the pool, then because there's more NFTs in the pool, the price will go down to 0.9 ETH, right? Whilst the LP still collects fees. And this is what the curve looks like, right? For the linear curve, right? I mean, it's linear, that makes sense. But what about exponential curve? With exponential curve, you can set the delta to be a percentage, right? So every time someone buys or sells an NFT, the buy price will adjust down or up by 10%. So, maybe you provided 10 NFTs, but at some point, you don't want your NFTs to be empty, right? You want to charge more as the price goes up, and then perhaps you can set this kind of pool where it's kind of this exponential curve. Cool. Yeah, and if you do 10% delta, you have to provide 10 NFTs and 6 Ether, roughly. Okay, cool. So I guess the summary is that it allows anyone to be an LP for an NFT collection while earning a lot in trading fees. I guess a lot kind of depends on trading volume, but that's kind of the point. Customizable curves, and it also makes NFT collections be more liquid, which is the main value prop. Because right now NFTs are very illiquid, right? You have to set a bid, or you have to accept the current price, or if you do want to sell your NFT, you have to undercut the floor and hope someone buys. But if there's always liquidity for a particular NFT project on Sudoswap, there's always going to be a fair market price for that NFT, and I think that's going to open up a lot more use cases, and it's going to facilitate a lot more trading volume for the NFT sector. Once crypto comes back, I guess. a quite common question I hear is, why would anyone want to LP, right? It's like, if you own an NFT, then don't you want the price to go up? Then, right? Why would you LP? But also I can say the same for altcoins, right? There's always altcoin liquidity on chain, right? And if you hold an altcoin, you probably think it's going to go up. So why would you ever be an LP for an altcoin? But obviously, there are LPs because they are financially motivated to do so. Right now, there's not that much TVL on Sudoswap right now. But I do expect over time more TVL to be on the application. I'm sure you recognize some of these projects like Crypto Lickbutts, Azuki's, Base School, things like this. Let's keep going. So I guess the incentive to be an LP is the same reason why ERC20 tokens holder wants to LP, right? You just trading fees. It's a pretty lucrative business, and I guess the thing with NFTs is that, or just tokens in general, is that I guess if you're trying to buy something in size, right, and you want to accumulate 0.5% of the total circulating supply, and you want to exit a position, you really can't do it because it's really hard to exit like illiquid altcoins, right? The same can be said for illiquid NFT projects, just because there's not enough liquidity for the pool. So one way a whale can, I guess, gain exposure to a project while still, earning yield on the project, or I guess a yield on the position while still being able to profit over time, is to be a liquidity provider for a particular altcoin and also a particular NFT project, so that, if people decided to buy the altcoin, right? Due to impermanent loss, you can slowly DCA your way out of the position. And also, if you're bullish Ether, maybe you can be a liquidity provider for Ether USDC. So if Ether goes down in price, due to impermanent loss, you can automatically DCA into Ether, right? Selling your USDC into Ether, right? And due to impermanent loss. I mean, obviously there's upsides and downsides, but generally it's because of token incentives, if there are any, and also basically mostly for the trading fees. So let's go over a case study of the very first project to actually do something called protocol-owned NFT liquidity, which is called based Ghouls. Right? I don't own based Ghouls. To be honest, I don't really own NFTs because I don't really have an edge in NFTs. I'm just sharing this as a little case study on a particular project that created their own Sudoswap pool and what came out of it. So this was August 1st, I believe. Yeah, August 1st. And they're an NFT project. I think their floor was like roughly 0.3, 0.2-ish. And they said, you know what, like we're going to be the very first NFT project to own our liquidity, right? Our own NFT liquidity. They set their fee to be 2.69%, right? Pretty high. Starting price, whatever, they set this in the delta, 1.69% exponential curve, right? So whenever someone buys an NFT, the price of all the NFTs within that pool goes up by 1.69%. And they deposited 10.345 Ether and placed 42 Ghouls, right? So this is their starting position, right? 42 Ghouls and roughly 10 Ether. After a couple of hours, the pool was drained, right? Everyone was like, oh my God, like this is the very first thing. I want to be a part of it. I'm going to buy these based Ghouls. And a bunch of people bought a bunch of Ghouls with their Ether. And, obviously, at some point they ran out of Ether. They ran out of Ghouls, and the pool only had Ether, right? So the sell price, the bid price by the pool was 0.5 ETH. So anyone that held Ghouls, if they wanted to, could sell it, right? The LP itself is agnostic of whatever your like JPEG is, right? Like whether maybe you own like two based Ghouls and you think one is ugly. Maybe everyone thinks it's ugly, but the pool doesn't care, right? The pool offers liquidity. The pool is offering exit liquidity for any based Ghoul holder, and it's allowing anybody to essentially sell their NFTs at the current fair market price, which is like roughly 0.5, and that's kind of what people did. A short while later, right, because the price went up like by 2x, some people took profits, or maybe there was some arbitrage trading going on, where maybe the price on Sudoswap for these Ghouls were 0.5, but it was 0.3 on OpenSea, so a bunch of people bought these Ghouls on OpenSea, paid a fee, and then arbitraged it, right, by selling on Sudoswap. And this kind of happened where 6 Ghouls were sold, and then the pool was 24 Ether and 6 Ghouls, and over time this kept happening, right, and after 6 days, right, on day 6, a bunch of people, right, sold and bought Ghouls. Floor went up a little bit, and remember the starting LP balance was 42 Ghouls and 10.32 Ether, but now the LP balance was 41 Ghouls and 14.48 Ether. So I guess the pool lost 1 Ghoul, but it was able to collect 4.16 in ETH, which I think is pretty incredible, right? There was no token incentives. This is all organic trading volume, and essentially it also created more confidence within the community, right? Because the protocol itself risked 10 Ether, which I guess isn't that much money, but it might be for this particular project. I have no idea. I really don't know much about this project, but they said, you know what? We're going to be an LP. You can buy or sell your NFTs into it, and we'll see how it goes. And they were able to generate buzz for their project. They were also able to earn 4 Ether in fees. I mean, they lost 1 Ghoul, but maybe the project doesn't care about that. And then over time, there's also, like I mentioned, Sudoswap has customizable curves. So at some point they were like, you know what, like the fee's kind of high, right? The community is kind of pissed. Why is it even higher than OpenSea? So they lowered to 1.69%, and then the delta was 0.42%. And the project itself can, experiment with this, right? Maybe with maybe they can charge lower fees, but that's going to facilitate more trading volume, so they're going to make more in LP fees. And maybe, you know, by lowering the delta, it's going to create for a more efficient market. I guess efficient markets, allowing for more trading fees, more arbitrage between OpenSea and Sudoswap, more buzz for the more like volume buzz for the for the project and whatnot. So I thought it was kind of cool. I mean, obviously this is like not like a watershed moment, right? I mean, it's literally like, you know, 20 ETH worth of LP, right? I mean, it's not that much money in the grand scheme of things. But, you know, they were an early adopter, the first adopter. They were able to generate a lot of attention, right? A lot of eyeballs for their product, and, you know, earn yield for the treasury. Customizable fees by engaging with the community instead of OpenSea's 2.5%. And they, you know, I'm sure that, you know, I mean, maybe they could have earned more in royalties if they just purely did an OpenSea. But I think this is a good time to transition into this topic of creator royalties, because, you know, this is a pretty hot conversation right now within the, I guess, NFT landscape, right? If you go to NFT Twitter, it's like a bunch of these creator founders are like, we want to charge 7% creator royalties fees forever to our community, right? There's that camp. And then there are people that trade NFTs that, you know, are, you know, I guess thinking about the future of the space. And they're like, I mean, yeah, like, do you think, like, did you really think you can charge 7% royalties forever? Like, does that even make any sense? But I guess there's like this whole argument behind the Web3 ethos of, you know, creator ownership, right? Token ownership, you know, artists can monetize by selling, you know, by charging money to their community, right? Charging fees to their community, right? And, but, you know, if you think about capitalism, if you think about it, like over time, like fees converge to zero. I mean, I talked about this earlier too, but, you know, OpenSea as the first mover, they were able to charge 2.5% because they really had no competition. But over time, right, people fork OpenSea, you know, create decentralized versions of it, introduce a token, they charge like maybe 2%, right? And then another protocol comes to charge 1.5%. And that's at some point, OpenSea is going to be forced to lower fees, despite, you know, them not wanting to do so. And I think it's going to be similar for royalties. Of course, you know, it's great that artists get to, you know, charge 7%, right? And the community is like happy about it. But I don't really think it's reasonable that, you know, artists will get the charts as high as like 7, 10, 5% in perpetuity for the community. I don't think it really makes any sense. And I think forward-looking NFT founders like Zeneca understand this. You know, zero creators royalties is inevitable. Of course, you know, creating an NFT project and like, you know, charging 5% is like a really easy way for creators to monetize. But, you know, just because it's easy doesn't mean that it's the best solution. I think that over time, creators have to find more ways to monetize their communities. And, you know, I think one way is to just for artists to just own their own liquidity, right? Just show dedication for the commitment, right? Just provide the exit liquidity, right? Like, what are you scared of? If you're scared of providing exit liquidity for your community, then your project probably probably deserves to go to zero in the first place, right? So I don't even think it's that big of a deal. And also, you know, he makes this point of, you know, creator royalties are not enforceable in smart contracts. So if you believe that crypto is a free market and the people just don't like paying, you know, up to 10% in transaction fees, right? Like 2.5% OpenSea and like 7% for royalties, then I think it's natural to like assume that people will go to other platforms where they have to pay less in fees, right? Like I'm sure that most people that like speculate on NFTs, they don't care about the founders, right? I mean, they just speculate on these JPEGs to make money, most of them. Of course, some of them really care, right? They're like, you know, like we're going to change the world and whatnot. But I think the majority of use cases for NFT trading is speculation. And if you believe that, you know, NFTs are just more illiquid versions of altcoins, right? I guess it's attached with a community in the picture. Then what's to say that, you know, NFTs can't have their own AMM model, right? Like Sudoswap, with concentrated liquidity, with projects that own their own liquidity, right? With LPs that, you know, really believe in the project, that, you know, provide liquidity for whatever they own, that earn fees, and, you know, support the project in that way. Yeah, so right now, some people don't know this, but like, for example, like if I send you an NFT, right, and you send me like one Ether, there's no royalties there, right? It's literally a peer-to-peer exchange. So similarly, you know, like these royalties aren't enforceable on a smart contract level because like there's nothing stopping. Like if I send you an NFT, like, do you have to like give me money first? Like, not really, right? Like, I don't, like, you don't have to give me money for me to send you like some random coin, right? So right now, creators rely on a centralized platform like OpenSea to honor artist royalties. But you know, I think this trend is gonna just go down, right? I think artist royalties are just gonna keep going down over time. I don't think it should be zero, right? I do believe in like the whole, I guess, ownership ethos, Web3 ethos, whatever. But you know, 5, 7, 10%, you know, I think these artists are just way too complacent if they believe that, you know, the community is happy paying 7% in artist royalties. That just like makes no sense. Of course, you know, there's obviously going to be pushback, right? Like whenever NFT creators feel threatened, right? If their revenue source is threatened to like go away, right? You know, they're going to be like, oh yeah, like it's a scam, right? Like, ooh, like Sudoswap, like, ooh, that guy, like I don't like that guy, right? That's the dimwit that decided to roll out this NFT market without creator royalties, right? And everyone's like, yeah, like screw that guy, I want to charge, you know, 5% royalties forever, right? And you know, this artist guy, right, RAC, he said that, you know what, like, no, screw that, like, no, royalties. I love my royalties, right? Ooh, I make so much money from my royalties. Oh, what if we blacklist anyone that uses Sudoswap? Oh, that'll show them, right? Ooh, you know, like these grifters. Ooh, no way, right? I mean, it's kind of laughable at this point. And you know, he doesn't really understand, like, you know, Sudoswap and like liquidity provisioning in general, right? Because I think he generally makes like these one-on-one NFTs, and Sudoswap only works for like projects like 10K PFP projects, right? Where there's like a bunch of NFT collections. Like no one's gonna provide liquidity for a one-on-one, right? Like that doesn't really make any sense. So you know, I feel like the NFT community doesn't really understand Sudoswap yet. So like maybe that's alpha, or like maybe, you know, maybe I'm an idiot, right? Who knows? Like maybe RAC is right? Maybe, you know, maybe the future of NFT trading is, and if like anyone that uses the platform without creator royalties ends up getting blacklisted, right? Like that's the future of Web3, right? That's the future of NFTs, right? These NFT founders really understand what's going on here. And you know, this kind of sentiment is everywhere, right? You know, artists, like, let's come together, you know, let's stop this corporate undercutting, let's unionize and have some basic fucking rights and respect, right? Like, these people are anti-Web3, you know, let's block them, like, you know, like, these people are evil, right? Like, how dare them, like, want to trade NFTs for lower fees? Like, that's ridiculous, right? Also, let's block all these people, right? Let's create a list of people, let's get all our friends to block them, like, that'll show them, right? Like, and he's like, yeah, let's do that, right? You know, we fight back, they get to choose, you know, like, but, like, what are these people saying? Like, what? Right? Like, imagine a project saying that, ooh, like, Taiki, you know, you sold my token, I'm gonna blocklist your address, right? Like, you can no longer, you know, sell or buy my token, right? Because you sold it once, right? Like, it's the same thing, right? I just feel like the NFT community just feel threatened by this, so they're just like pushing back in irrational ways. But I just feel like the trend is this going in this direction. And you know, whenever there's like pushback like this from people that don't understand this technology, I just feel better. You know, I just feel more comfortable with the fact that, you know, Sudoswap is like one of my largest positions, me personally. You know, people like Loomdart, Jimmy.eth, you know, these people, maybe they don't think it's a scam, right? But they think like Sudoswap is like threatening the Web3 ethos because, you know, they get rid of royalties. But I don't necessarily think it's the case. I think it's inevitability. Ratwell, who's also an NFT founder, said, hey, like, I didn't realize they had no royalties. Like, what's the point of using them, right? As an artist, right? Sudo gets a fee. It's like Sudo gets fees, but not creators. And then Base Carbon said that, you know, royalties are just a market inefficiency that's going to eventually be completely removed because it can be. Also, it's not up to artists in most of the highest volume collections. Collectors choose order list, which is, you know, kind of true. And, you know, I reply, the easiest answer is that it's a free market. Right? Over time, in a free market, capitalism, you know, people create good products like OpenSea. People realize that they're good products and they want to take market share, so they're going to create a new platform, undercutting them in fees, which is going to cause the original, right, company to undercut fees. It's kind of what you see in Lyft, like in a rideshare, right? It's like when Uber first started to like gain adoption, like the taxi drivers were like, no, let's unionize, like, you know, Uber is like evil corporate greed, like Silicon, you know, stuff like that. But, you know, eventually like, Uber is just a better product, so people use it more often. But, you know, Lyft came, right? And then, you know, but now Uber has to compete with Lyft on pricing, surge pricing models, different products and whatnot. So over time, fees convert to zero. These different companies have to compete with each other to gain customer adoption. And at the end of the day, people are just gonna go to platforms where they get the best deal, right? That's kind of how it works. Yeah, and like I mentioned earlier, like, does it make sense that creators get to charge 5 to 10% royalties in perpetuity? Do you think the community even wants that, right? I mean, maybe some people do, right? Maybe people are, I don't know, like, yeah, I'm not saying it should be zero, right? Maybe it should be like 0.5% or 1%. But I think the 5 to 10% royalty age is gonna just, or it's gonna be over, right? In the coming months, in my opinion. Yeah, and I think creators, starting on this point, creators are going to need to adapt to this by either learning to be an LP on Sudoswap, or maybe they have to convince their community that paying 2.5% on OpenSea is better than lower fees on the Sudoswap because of the Web3 ethos. But I think I'm not saying that Sudoswap is going to eat up like 100% of TVL and like market share, right? Of course, they will coexist. But I just feel like the whole royalty argument, I feel like, is a little bit too overblown, and it just feels like these people are like taxi drivers, right? It definitely feels that way. And the Icebergy, right, wrote a pretty good point, is that I think people focus too much on Sudoswap as a platform that gets rid of royalties, right? But that's not the point, right? It's more of a technological innovation, and because it's a peer-to-peer marketplace where anyone can be an LP, right? It's this concentrated liquidity model. I mean, naturally, it doesn't have royalties, but if there's enough community outcry, they can definitely add royalties, right? Let's say on, like, right now, Sudoswap charges 0.5% fees, which is still pretty high, right? Because Uniswap charges, I guess it depends on the pool, but generally Dexis charge 0.3%. So maybe as there's more competition, Sudoswap charges 0.5% fee. Maybe 0.3% goes to the protocol, and then 0.2% goes to creators, right? I mean, they can definitely add that, right? I guess it adds more technical complexities, but I mean, that could happen, right? And one use case that he talks about is that I guess, yeah, and I guess, like, this whole anti-Web3 narrative of like no royalties, I guess, is that because these artists rely on OpenSea, right, which is a centralized platform, to honor these royalties. So, but like OpenSea had this whole insider trading thing where that guy got sent to prison, right, or he got arrested, banning people and the artists from the site. There's like all these phishing scams and emails that OpenSea sends, right, with these emails. So it doesn't really make sense. If Web3 is like your argument for like supporting like royalties or OpenSea, then I feel like there's like some cognitive dissonance there that maybe I'm just an idiot, right? But let's keep going. So let's talk about some additional use cases that Iceberg is referring to, and this is like what I'm more excited for, right? Like, I'm not buying into Sudoswap because of zero royalties. I just wanted to spend some time on it to give my thoughts, but I'm more excited about the new use cases that this platform is going to provide. So one thing I can imagine is Sudoswap, or I guess projects in the future, utilizing Sudoswap to launch mints using liquidity bootstrapping pool style auctions. It's not live yet. They said it's possible. Timeline probably like 2023 and beyond and whatnot. But it's going to offer more organic price discovery on NFT mints. So if you don't understand how LBPs work, right, this essentially works for ERC20s, where if a project is launching a token, the starting price is like here, and then the price is designed to go down over time. So this prevents bots from just like buying all the tokens up front, because if a bot buys all the tokens up front, then the price will just spike up, and then it'll naturally go down over time, and then it'll give regular people like you and I to get in at lower prices. So this offers more, I guess, like fair market pricing for tokens when they launch. So something like this can definitely happen for Sudoswap, where instead of launching a mint at like launching 10,000 NFT project, 10,000 PFP project, mint price 1 ETH, maybe you can do something like this where you set your custom curve, right? And it doesn't even have to be this way. Brent, who I think is a good follow, right? He's kind of like the Sudoswap maxi, he loves dogs and whatnot. And he's kind of trying to create his own project and really show, I guess, the benefits of Sudoswap. So I'm not showing this, right? I'm not gonna buy this thing, but Sudonauts soon. The launch will take place entirely on Sudoswap, all proceeds will immediately be placed as artist-owned liquidity. So it's going to start out as a one-sided LP, right, where it's, they're going to, deposit a bunch of NFTs, single-sided, and then, they're going to set its own curve where maybe he wants half of the NFT collection to sell between 0.4 and 0.6 ETH, right? And then as more people buy into this, maybe they want, or maybe Sudonaut, the price of Sudonaut will have an exponential curve where past the 5,000 sale point, maybe the exponential delta is going to be like 10%, where every incremental sale is going to increase the price by 10%, and stuff like that, right? Where if people buy into the pool, maybe 50% of the proceeds can go to the founder and 50% of the proceeds can go to artist-owned liquidity. And maybe, that artist-owned liquidity, they're going to burn the contract, or they're going to burn the keys or something. And, that's going to be liquidity that the artist can never touch. Maybe something like that can happen, right? It's kind of the similar concept to protocol and liquidity with Olympus DAO, Wonderland. Of course, those tokens went to zero. Not zero, but, went down 99%. But I think the concept of protocol and liquidity is a really interesting one. And I do expect, even popular DeFi projects, crypto projects are already doing protocol and liquidity. And I think it does make sense. So why can't the same happen for NFTs, right? Why can't projects own their own liquidity, right? Have some skin in the game, right? Like put some of your ether being an LP, right? Provide your community some exit liquidity. Are you scared, right? If you're scared that you're providing exit liquidity, that your NFT project will go to zero, then it probably deserves to go to zero anyways, right? Like, that's kind of the point, right? So maybe do it on Sudoswap. Don't get too caught up on these numbers, right? Because I have no idea how this thing works, but maybe, part of the sale goes to the treasury, part of the sale goes to protocol and liquidity. That protocol and liquidity, the team doesn't touch it, right? And it's going to be consistently earning fees and whatnot. And over time, maybe through all the fees, the protocol and liquidity just grow so large where, people can just sweep floors, right? Like they can sweep like 50 Sudonauts and like they can pay minimal slippage because there's so much, there's so much liquidity, stuff like that, right? And yeah, I feel like there are going to be more NFT projects that's going to utilize Sudoswap as a way to launch their particular project. I already know that there are projects that are planning to do this. I don't really know what they are, right? I just keep hearing that, oh yeah, like I'm planning to do it, right? Like, oh yeah, I know some teams doing it, right? But that's kind of the point. And I think people get scared about like owning their own liquidity, right? Because it does add a risk, right? Instead of just holding NFTs, like not only do you have to hold NFTs, you have to, I guess, provide NFTs and Ether, right? Like you have to put up more capital. But I think it's good because with Base Ghouls, it kind of showed commitment for their community, even though the pool was like tiny to begin with. It shows commitment for the project by owning their own liquidity, pairing guarantees with Ether, basically offering as liquidity, for the community. Obviously, there needs to be more education done on this front because artists, like, they don't understand DeFi, right? Like they don't want to help. They don't want to learn this stuff. But I do think that this is a trend, right? That's gonna be prominent in the next couple of months, next couple of years. And I don't think that artists should have like a free ride and just like, just default charging like 7% royalties. And also, in terms of like, talking about other use cases, Sudoswap, because it's, you can do single-sided deposits. You can do, on-chain sell walls, on-chain buy walls, basically, on-chain limited orders. I think maybe potential market makers want to get in on this action. I know some big firms trying to get into NFT market making. I'm not sure how they plan to do that, but it could offer some use cases. And I don't really think of this as a huge use case, but I think with the Olympus DAO days, right? Like people were, especially Wonderland, right? We were like, our token will never go below this price because this is our backing, right? Like we have this by wall, which didn't really work out, obviously. But maybe protocols can say that, like as we earn more in fees, as our protocol and liquidity grows, as we, as our treasury increases in value, maybe we can say that, like we will always set a buy wall at, let's say, 1 Ether. So the NFT can never go below that price because there's always exit liquidity for it. Obviously, I'm thinking way too far out in advance, but the idea is that Sudoswap is core NFT infrastructure, and there's going to be more use cases built on top of it. And as more use cases are built on top of it, it's going to increase the TVL. as the TVL increases, it's going to facilitate more trading volume. As it facilitates more trading volume, the protocol earns more fees, which will therefore give more value for its token holders. Okay, that's kind of the idea. Yeah, and also because there's always liquidity for a particular NFT paired with Ether, now with Sudoswap, you can swap one NFT into more NFTs, right? This is not possible. So let's say you have this NFT worth 10 Ether, two NFTs worth 5 Ether, you can swap it, right? It's kind of like Bancor. Because Ether is the intermediary, you can swap your NFT, right? And like make a hop essentially, and you know, pay fees that way. I don't think this is going to gain that much traction, right? But I'm sure it's going to facilitate more trading fees because, you know, if you think about it, like let's say you have this NFT and you want to buy another NFT, right? By selling your first NFT, but that NFT is not liquid, right? So what you have to do is you just have to list it below floor, hope someone buys it, and hope that that's enough money to buy this other NFT. You know, there's no immediate conversion ability, right? Like what premium would people pay for that? For the ability right now for someone to swap their NFT, let's say if maybe they're willing to pay like a 5% discount, right? A 5% premium. Who knows, right? It offers more use cases, right? I feel like the one thing that DeFi people understand is that liquidity is very, very important, right? Liquidity allows more primitives to be built on top of it. Liquidity allows more trading volume. And just like liquidity is like one of the most important metrics to have for a particular NFT project, and that's kind of the important takeaway I want to have here. And also, I don't necessarily think that this will have that many use cases either, but I think Sudoswap will also offer borrowing against their NFTs. There's projects like JPEG that does it, like NFTFi, but it's not really liquid, right? It's really not liquid. And if you think about on-chain liquidations, if you get liquidated on Aave, right? There's a bot out there that takes your position and profits off of it, right? And they can only profit off of your liquidation because, you know, there's on-chain liquidity. If Uniswap doesn't exist, then Aave can't exist, right? Because there's no way for them to like liquidate your position. So, you know, let's say someone has a Bored Ape of 100 Ether, right? Let's say that's the price. They borrow a bunch of USDC or something, right? And they get liquidated at, let's say, the price of 70 Ether. But now with Sudoswap, because there's always on-chain liquidity, if that liquidation threshold gets met, our liquidation bots can immediately liquidate that position, right? Sell that ape into Ether, convert it into USDC, you know, and stuff like that. Like I said, I feel like borrowing against NFTs, like that use case is not that large, and I don't expect that to get large anytime soon. But, you know, liquidity allows for more products to be built on it, which I think is the most valuable aspect. Yeah, and, you know, Kobe made this point, you know, and Kobe was one of these people like arguing with these NFT people, right? It's like, you know, like Kobe's like, NFTs are just altcoins, but with pictures, right? Like, if you think about the majority of the successful NFT projects, right? They're not like one-of-one NFTs. They're these PFP projects with 10,000 NFTs, right? And the majority of these people, right? I mean, some people get super attached to like, you know, their particular JPEG, right? It's like, oh, this one has, I don't know, like a pointy hat, right? Like I love my NFT, right? I am this NFT. But generally, I feel like most NFT traders, you know, they're speculating on these NFTs. They treat it as tokens. They're buying, like, they're sweeping floors to, you know, sell higher, right? I feel like most people don't really care about the aesthetics of their NFT. They're just treating it as a vehicle to make money on it, right? I feel like that's mostly like what NFTs are for. Of course, hopefully over time, there can be more utility for NFTs. NFTs can be more collectibles and whatnot. But we're so early in this NFT ideation phase that I feel like I do agree with Kobe. I do think NFTs are basically altcoins with pictures that happen to be more liquid, that, you know, take like a 10%, from 5 to 10% fee every time you want to swap in and out of this position. Yeah, and I mean, NFTs are called non-fungible tokens, right, to begin with, right? And of course, you know, it's JPEGs. I mean, you know, these images and whatnot. But yeah. People often say, like, you know, which floors am I sweeping, right? Like sweeping floors, I feel like that's the same concept as, you know, buying some altcoins at the current price, right? Because if you're sweeping floors, like, you don't care what it looks like, right? You just want to buy like 10 of them at the cheapest price, hoping to sell it at a higher price. And I feel like, there are a bunch of people that sweep these floors, and I can't really differentiate NFT trading, sweeping floors as, I feel like it's really, really similar to like buying altcoins, right? Except that it's more illiquid. But Sudoswap can make it more liquid. It's kind of the point. So I don't know how long this video is, but let's keep going. So let's compare Sudoswap versus OpenSea versus LooksRare versus X2, Y2. And then comparing the pros and cons of these projects. So I guess one thing I'll touch on first real quick is that Sudoswap is going to be more gas efficient than OpenSea. So OpenSea is going to incorporate this thing called Seaport. It's a protocol designed for more gas efficiency, but even Seaport, right? Sudoswap is more capital efficient. So when Sudoswap gets integrated with NFT aggregators such as Gem and Genie, it should technically allow for more swaps on the Sudoswap platform. But more importantly, aggregators. And so Scott E, right, the head of NFT product at Uniswap, he even mentioned that, at the moment, Sudoswap is the leading NFT hyperstructure. Literally, the head of NFT at Uniswap, right? The premier DEX in all of crypto is saying that, the Sudoswap design makes sense, and I expect more volume to go through Sudoswap. And I expect that the competitors, such as OpenSea, has to, change their business model in order to compete with these Sudoswap, so they don't get their get a chunk of their market share taken away from them. Both Gem and Genie and very common aggregators will integrate Sudoswap soon. So let's talk about the tokens, right? OpenSea, LooksRare, etc. So OpenSea, obviously, if I can invest in the OpenSea token, I definitely would, but I can't because they're a private company. And I think I don't know if they'll ever release a token, but if OpenSea had a token, it would be worth a lot, right? Because they're an amazing business. No token incentives, but they get to charge a lot in fees, right? That's amazing. There's also LooksRare, right? People like LooksRare. There's also X2, Y2. They're basically similar products, but they're essentially pure farm tokens that incentivize wash trading. So this was January of this year, but I'm sure the valuation's down 70% or something. But OpenSea, right? They're worth multi-billion. So what should LooksRare be valued? LooksRare, right? Basically, they are this OpenSea fork. They charge lower fees, and they incentivize people to trade on their platform by giving away LooksRare tokens, right? $200 million market cap. But if you actually look at the trading volume of these platforms, LooksRare doesn't really make that much in volume, right? $100 million compared to Magic Eden at almost $250 million, OpenSea at $500 million over the past 30 days, and then X2, Y2 at $750 million, right? So maybe X2, Y2 is undervalued at $22 million market cap. Well, I don't really think so, right? Because these tokens and these platforms, most of the trading is wash trading, right? Because people are literally just trading to receive these tokens, and then once they receive these tokens, they just dump it in they literally dump it, right? It's a farm token, right? I don't think Looks and X2, Y2 would have that much real volume if it weren't for these Ponzi token incentives, and I think Looks has a 10x premium on X2, simply because they have famous influencers in their seed round, obviously they're incentivized to talk about it once a week or something, buying the dip in LooksRare, right? Stuff like that. Because if you actually look at the metrics, X2, Y2 is doing more volume, right? Look at this. X2, Y2 versus LooksRare. This dashboard was made by the X2, Y2 team, so obviously they're gonna make the data look more appealing. This is market share including wash trading. It's pretty equal, right? Wash trading. But if you take out wash trading, it's majority OpenSea. Now, like I said, this was made by the X2, Y2 team, so maybe it's a little biased. But how do you even calculate whether something is wash trading or not? I feel like this is an imperfect way to do it. But generally, if it weren't for these token incentives, it really wouldn't. These other OpenSea forks wouldn't really capture that much volume, right? It's kind of similar to Uniswap, right? People were saying, ooh, people can just fork Uniswap, and Uniswap, they're gonna lose market share. But that doesn't happen. People the leader, right? The first mover always wins, generally. And that's kind of what you see in crypto, because the leader always innovates and just offers a better experience, right? And they have the brand equity. So OpenSea, great business, and LooksRare X2, Y2 needs token incentives for the platforms to succeed. So I don't like their tokens. I think LooksRare is overvalued. But with Sudoswap, as a biased bag holder, their volumes are actually picking up, right? And I mean, maybe it's trending down, right? Maybe this is the top and I get wrecked. But you know, I mean, they just launched in July, and you know, obviously the volume isn't that much, right? I mean, 400 ETH, like platform fees, like 2 to 3 ETH per day. It's not that much, right? But I'm more speculating on the future growth of Sudoswap, and I do like where they're going. Since launch, they have $12 million in fees, $12 million in volume, $60,000 in platform fees, and this is without a token, right? They don't have to offer token incentives, primarily because this platform is so good that it's able to attract LPs of NFTs to provide liquidity on the platform without having inflation token incentives, right? Similar to Uniswap. Still very unproven, right? They launched like over a month ago, like a little over a month ago, so they still have a lot to prove, but I think this trend is promising, right? At least as a token holder. So let's go over the difference between Sudoswap and NFTX. NFTX is also this other NFT protocol that kind of tried to do the same thing that Sudoswap did, but in late 2020, I believe. And I think, you know, their innovation was necessary, right, in order for the project like Sudoswap to come in. But, you know, there's a fundamental difference between NFTX and Sudoswap. NFTX, the token has not done great for good reason. But the concept is, let's create NFT. I mean, I guess both protocols have the same goal, right, to make NFTs more liquid. But how NFTX works is that they tokenize NFTs into ERC20s, and they try to incorporate it into Sudoswap, which is Uniswap v2. But Sudoswap says, well, like, why are we trying to incorporate NFTs into a model that's made for ERC20s? ERC721s deserve their own curve, deserve their own token model or AMM model. And I think that's where the major difference is. So CryptoPunks, for example, this is at NFTX. What you can do is you can take your punk, you can put it into NFTX, and in exchange, you'll get this punk token, which is going to be tradable on Sudoswap, right? So this is Sudoswap, right? You can trade your Ether into a punk, and then if you buy one punk, you can go back here, and then you can redeem it for, you know, whatever punk. And I think if you redeem it for one punk, it's random, right? So you don't know what you're going to get. And I think you can pay like a 2% fee to like select a particular punk. I think it's a cool concept, but it never picked up steam because, you know, Uniswap v2, I mean, Sudoswap is like not capital efficient at all, right? I mean, that token is trending to zero, unfortunately, in my opinion. Yeah, so NFTX tried to incorporate NFTs into an AMM designed for ERC20s, but I think ERC721s deserve their own customizable curves. So let's talk about what everyone cares about. Let's talk about the token itself, right? So Owen, who is the founder, posted this late 2021. He essentially said that, you know, we launched this without any VCs. Our token did well. This is what he looks like, right? He's got round nostrils, right? You love to see that. At the date of recording, I'm recording this the night of the 14th. Market cap roughly 80 million, right? 80 million circulating supply. And yeah, don't worry about the total supply, right? Because it'll never get there. And Owen mentioned that, you know, once they launch, they'll soon, so yeah, upon the release of the AMM, the goal is to rapidly shift towards the DAO, funding further development, and they have 0 VCs, expect a generous allotment to both the team and the community. XMON holders and 0 XMON NFT holders are top of mind when it comes to the community, right? So essentially, yeah, I was talking to someone and he said that there's going to be this, you know, this conversion mechanism, I guess, where you can redeem Sudo by burning XMON, or, you know, something along those lines, where, you know, 1 XMON is going to be converted for, you know, a particular, like, you know, maybe like 1 XMON for like 10,000 Sudo or something. That's going to be kind of how the model is going to be. And I guess with the whole circulating supply thing, people shouldn't worry about that because it'll never get there. Then the circulating XMON is what matters. Because the rest is just a multisig and it won't get Sudo. And it's not too dilutive. I'll talk about the farming aspect later, but, you know, Sudo isn't out yet, but it'll be distributed to XMON and maybe 0 XMON NFT holders. There's XMON staking, but there are no fees that accrue to this, so you're just going to be wasting gas if you do this. And if you want to LP for XMON ETH on Uniswap v2, you can receive roughly 70% APR, roughly. I think it says somewhere here. Yeah, I mean 0.22% per day, which converts to like roughly 70% APR. Yeah, 2,500 circulating. Emissions are purely from farming. Roughly $80 million market cap, which I think is pretty attractive. And I guess the worry is that, you know, what if XMON holders get diluted, right? Because it's not really clear. It's, you know, there could be a scenario, right, where maybe 50% of the pseudo supply goes to XMON holders, maybe 30% goes to the team, and 20% goes to NFT holders, right? So if you're buying XMON for the pseudo token, there is a chance that you could get diluted. But let's kind of scenario plan for like what kind of dilution can we expect, right? Like, I don't really expect dilution to be over 50%, right? So I mean, I have no idea. The team keeps it really close to their chest, so I have no idea. But, you know, even if they get diluted heavily by 50%, that still implies a current market cap of $160 million. And if you think about, you know, the total addressable market for an NFT marketplace that gets charged 0.5% fees, $160 million market cap, like I feel like that's pretty good, right? But what about like a more fair token distribution? If when XMON holders only get diluted by 33%, that implies a current market cap of $120 million, which makes it more attractive. And you can like do this. I mean, you can do some scenario planning, right? If you're worried about it. But generally, even in the worst case scenario, I still feel like the valuation was pretty attractive for me. And, you know, I feel like NFT people don't really understand it. So I just feel comfortable with it being like one of my largest altcoin bags, if that makes any sense. And, you know, like, and, you know, on the second point, the team also told me that they dislike, so they said that they can't share anything about their tokenomics, but they dislike low float inflationary tokenomics. So low float is like, you know, anything on the Solana ecosystem, right? Where, you know, like it's just super inflationary. And the team mentioned that they don't intend Sudo to be an inflationary token. Maybe it'll be mildly inflationary to incentivize like early adoption, but, you know, it's not going to be like this farm token essentially. You know, it's just going to be a governance token that hopefully has like an X Sudo model where you can stake your Sudo to earn fees. This is not confirmed, right? I have no idea if this is going to be a thing. Right now, XMON is basically a PvP token, right? Where people are kind of speculating on like the future market cap of Sudo because people know that they can redeem their XMON for Sudo. But, you know, right now XMON is literally, it literally has zero utility. You know, it's people are just like trading it and like hoping that they have some alpha and like understanding what kind of market cap it'll have. But, you know, XSudo would be, like make it an amazing token, right? And I feel like if XSudo is a thing, then the token will explode. Actually, I take that back. I have no idea what I'm doing. But, you know, the thing is, like, whether the fully diluted value is 100 million, 200 million, 300 million, 400 million, whatever, I still think it's pretty attractive as a valuation model. If Sudoswap, you know, can gain a significant market share of total NFT trading volume. Yeah, and it's like one of the largest positions in my portfolio. In terms of risks, maybe the volume like drops off, right? Maybe I'm literally making this video at the top, and, you know, there's a lag. There's no product market fit, right? And that would suck. There could be unfair dilution of XMON holders. No, definitely possible. Maybe the NFT community pushes back against zero royalties, and maybe they win out, right? Who knows? I don't think they will, but maybe they do. Maybe there's going to be a lack of demand from LPs. So if there's a lack of demand, then they're going to have to incentivize LPs via inflationary tokens, and that's going to really, you know, lower the value of this token itself. There's also smart contract risk. They just launched a month ago, so who knows if the, you know, and yeah, I mean, yeah, it's they just launched a month ago, right? And anything can happen. Anything can happen. So summary. In summary, Sudoswap is a decentralized NFT marketplace that brings instant on-chain liquidity for floor NFTs. It allows LPs to create customizable curves that will open up new use cases for traders trading NFTs and creators to monetize. And, you know, creators can't monetize via royalties, right? But they can monetize by just being an LP themselves, right? What's wrong with that? And Punk6529, who is like one of the, you know, most respected NFT traders in the space, said, you know what? Or I guess he summarized it well, right? It's an on-chain composable, familiar DeFi product, right? Competing with the collection floor bid on centralized exchanges, aka OpenSea. practically speaking, there's only going to be real liquidity at the floor. So Sudoswap will only be applicable for projects, with a bunch of NFTs, right? So like 10,000 PFP projects. It's not going to apply for like one-of-ones, essentially. Upcoming catalysts, Sudoswap announcement. I have no idea when this is. I expect sometime this year, but who knows? But like I'm not buying this to like sell the news, right? That's not really my thing. Gem Genie integration, right? They currently have $12 million in volume without any NFT aggregators. So once NFT aggregators actually implement Sudoswap, I feel like the trading volume will skyrocket. More NFT projects providing liquidity. I feel like if NFT projects are able to get over this mental block of zero royalties and say, you know what, like we're going to be an LP, and that's going to be our way of earning money, right? Via transaction fees and whatnot. I feel like these are going to be a good catalyst. The top two will happen. The number three, I have no idea. Because if a bunch of NFT projects provide liquidity, then naturally it'll create this reflexive loop of more protocols wanting to do it, and then if the TVL of Sudoswap increases, then that's going to allow for more trading fees, or I guess trading, which is going to result in more fees for the protocol itself. And forward-looking, thinking about, whenever you buy something, you have to think about like why would someone buy this after me, right? It's like why would they do that, right? Yeah, you kind of have to think, like 6 months in advance. I can see this asset being something that funds are attracted to, because they can rationalize it by saying that it's a bet on NFT infrastructure, and they don't really have to make individual bets on which projects to mint or buy, right? Which floors to sweep. This is definitely something some problem I run into. Like, I'm really bullish on NFTs. I think it makes a lot of sense. I do expect the NFT market to really grow, and I do expect, and I feel like NFTs can rationally lead us out of the bear market, right? Whenever speculation does come back. So I want exposure into NFTs, but I don't really have an edge identifying which PFP project is going to go off, right? Which project is going to 100x, right? Which next one is what is the next Spacey, right? Bored Ape Yacht Club. I have no idea. But if I can bet on an NFT infrastructure where no matter which NFT project wins, I get to collect transaction fees, hopefully, that is a bet I can easily get behind. And I do think that this is kind of thinking that funds think about. And if you're a hedge fund and your clients want NFT exposure, do you buy a punk? Do you buy a Bored Ape Yacht Club? Right, which is pretty illiquid, right? Like, what if your client wants to redeem their funds, right, and withdraw, right? It doesn't really make any sense. But if you own Sudo as a fund, then there's always going to be a liquid marketplace to, sell into Ether or USDC. And I feel like I can definitely see an institutional bid for Sudo in the future once the product keeps improving and shows, improves product market fit. If you think about crypto VCs and funds, they don't really like to invest in public markets. I feel like the incentive mechanism for VCs and I guess retail traders like you and I doesn't really exist. So if they do want exposure into Sudo, because Sudoswap doesn't have any VCs, they'll be forced to buy in the market. This is hopium, but maybe it happens, right? Maybe we get to dump on the VCs. Yeah, I already said this, but similar concept of I do not have an eye with PFP products. Right? It's just not my thing. But what I do know is that the NFT market is going to grow a lot in the coming years. So I just feel like betting on the rails, right? Betting on infra just makes sense. And my last thought is that I think DeFi people have an edge over NFT people understanding Sudoswap, right? The value props of it, because we do understand the importance of liquidity and the advantages of concentrated liquidity over just UniV2. Because the main arguments behind, from the NFT community against Sudoswap is, what makes this different from NFTX, right? It's just people trying to pump their backs. But, technologically, it offers an improvement over NFTX. And then the second argument is no creator royalties. But like I mentioned before, I do think creator royalties are just going to go down over time. And NFT founders are just kind of against the idea, right? They're just pushing back against that idea. But at some point, we are in a free market, and I mean, it's up to us, right? It's up to the NFT traders, people buying NFTs, to decide where we want to buy our NFTs, right? And if we don't want to buy, like, give these rich NFT founders like 5% royalties, 7% royalties to begin with, then we're gonna like end up choosing the place that just gives us the lower fees. And you know, I think artists will have to come to conclusions on this fact. I'm not saying that, you know, artists don't deserve to make any money, right? They definitely should, right? If they have a good heart, if they're trying to add value. But I think they're just gonna have to find more creative ways and more value creative ways to their community that also give them more skin in the game. So thank you guys for watching. Hopefully this video is useful. Let's check how long this video is. Okay. Oh, that's not too bad. Okay, 75 minutes. But hopefully this video is useful. Yeah, so yeah, hopefully this video is useful. Let me know what your thoughts are on Sudoswap. Like I mentioned, I am a DeFi guy. I am not an NFT guy, so what the hell do I know, right, about JPEGs? But I'm just more applying my DeFi knowledge into NFTs, or I guess my DeFi knowledge into, sorry, let me rephrase that. I'm more trying to apply my DeFi knowledge, right, and how the DeFi space has evolved, and I'm trying to think about how will the NFT space evolve, and I think Sudoswap is gonna fit right into that. So thank you guys for watching, and you know, if you want more premium content, check out the private Discord. Link will be in the description below. I do 2 private videos per week, as well as 1 private live stream per week, so 3 videos as well as daily updates. So thank you guys for watching, and have fun farming out there. Yeah, bye bye.